Hello everyone, Nick here looking at the SPY just to quickly give us a check on where we stand. Today is the 30th January, and also to show you what the lines on my charts mean if you don't already know that. So this is the S&P 60-minute chart. Every candle is an hour. And I have lines on there. Some I put, some automatically come up, like this orange line right here, the solid line at 320 and change is the actual mathematical value for where most of the trading happened. It's a close tie between this level and this level here, and that level up there. So that tells me that there is support here and there is resistance up here. So there is support below current prices and there is resistance where I shared 328.5 resistance. So 328, 327, 328 is resistive, and onus is on the bulls to take it out. But that's the opportunity. If they take it out, they overshoot. So based on this chart, I can extend this. You see this little box I drew a while back, earlier this month? I can extend it because it's still, look how well it plays to today. So if I put 200 here, no, maybe 250. Okay, so it's closer. But you see what I'm saying? It's still in play right now. So they're falling into it. It was meaningful back then, so it's going to be meaningful again here. And it should provide some support. Now, headlines might slice through the support, but let's say it doesn't hold. So this is where I draw the other lines that you see. The dashed lines are alerts for me, so don't worry about it. But if I wanted to say, okay, so for the next few hours, if they lose this number, I have too much coffee, I can't line it up there. Oh. Anyway, they might fall. It might trigger some more selling. And how far they go. Technically, they should go as deep as this. Why? Because this is an inverse cup and handle. I'll draw it out. And the technician would tell you it should be the fall from the neckline as big as the cup deep. So this is the cup right here. So it should be this big down below. So it should be like eyeball 313, 314, which, look at this. I had this line from a while back, so I'm going to put it here, and we'll call it a day. Will they go straight down? No, because usually they will have support. So if I wanted to really draw it the way I usually draw it, I would do it this way. All right, so same thing, same line. If they lose this neckline, which is an inverse cup and handle, you don't need to know what it is. It's a neckline. It's the prior bounce level. They're going to fall to here, we said, right? But not in a straight line, in my opinion, unless they gap down. So they were going to fall to here. They're bouncing a little bit, and then they come back to and finish the job. So why do I do it this way? Because I'm just looking left and seeing what other areas that are of interest to me. So conversely, this would be a resistance zone right here. That would be the first resistance zone. So if I wanted to draw a box to say, okay, there's going to be some trouble. If I'm in trouble, like this morning's bounce, I should have lightened up if I was in trouble with long, potentially long positions, but I'm going to move it up a little bit here. So if the bulls are able to get up here, then they might encounter some selling on the first try. If they do it again, which is the exact same opposite of that scenario I did down below, then I expect them to do something like this. Rally, like to retest the highs, but probably not in a straight line. They're going to hit some resistance somewhere around here and then finish the job. And then once they get up here, we'll draw other sets of lines. So this is one line at a time. Again, this is an hour. So if somebody is trading longer term, then this is noise. Who cares what the stock market does in the next couple of days? But then again, we are at all-time highs. So this is a 1 week chart. 5 years, 1 week. We haven't even blinked. These are the lines the triggers I have. So look how far away from moving averages we are. We are hugging the upper ends of the Bollinger Bands, which means if you think about it with the bell curve or whatever, this is like the 2 delta sigmas. So if everything happens within plus or minus 1 standard deviation, we are in the 2 to 3 standard deviation, which is, we've been unusual for a while, hugging that line up there. Now we're falling back from it. There's no disaster coming unless we do get a black swan, but it's not a correction like people, we get one red day and CNBC is ready to pull out. The market's in turmoil. Now, having said that, they're blowing this virus out of proportion, not from the fact that people are not getting sick. It's spreading fast, but they raised an alarm inappropriately, I think. They crippled the world over a virus that is less deadly than the flu. So the numbers they're sharing, the death rate is 2%, 2.2% or something like that. That's a lot of people dead, 180 in China, for example. But the rest of the world is not dying out of control. We have cases in the U.S., 14, 10, 14, something like that. Some in California here. But they're contained, and they're cases not transmitted. They're, I think, cases that somebody came. So it hasn't jumped and run, and it's not deadly even if it does jump and run. But they raised the alarm like we've got Ebola running down our streets, and they crippled their economy. There is no doubt that the Chinese companies and anything that has to do with related with travel worldwide, entertainment, casinos over there. Some casinos are US-based; those will do better. Some casinos have online, so those would be less impacted. But the casinos that are completely dependent on China gambling, they got crippled in the worst time too. During the celebration where they had a week off, they extended that week. They're probably going to extend it again. Not only they're off work, but the businesses that were going to benefit from these festivities, those festivities are gone. So it's a swift kick in the nuts, so to speak, and it's going to break the momentum. And if we get a growth in China print below 5, I think the whole market will correct hard just on the headline itself, because I can't even remember the last time we talked about 4s in China. I remember when everybody freaked out when we went to 6 growth percent. The U.S. is 2. China is falling into 6. They've been sticking to 6 or whatever, and now they're talking 5s. But if we get a 4, woo-wee. Anyway, my 2 cents. Update on the S&P and how I build the charts, and kind of a little blip on the macro. Nick signing out.